Hey guys, we're going to be looking at Amazon today, ticker symbol AMZN, going to look at the fundamentals and then give my fair value of Amazon using discounted free cash flow and the Warren Buffett Graham or Ben Graham intrinsic value. So let's have a look at the stock quickly. Just before the pandemic, it was $2,200 a share, hit lows of around about $1,600 and has basically doubled since then. It is now $3,327.89. The all-time high of Amazon was just under $3,800 a share. So let's have a look at my valuations, or let's have a look at my steps. So Amazon currently has a market cap of $1.6 trillion, sector technology, and as I said, $3,335 a share. Does not pay a dividend, but let's have a look at the P ratio first. So what we want to see is the P ratio less than the market. No, Amazon has a very high P ratio of around about 58, so that is a fail. Next is the revenue increasing 232 billion to, well, basically doubled, 443 billion. So that is an absolute massive increase in revenue, massive sales, massive increase on the AWS. This company has, well, as you can see, absolutely crazy revenue. Profit, has the profit gone up? Trebled, 10 billion to 30 billion. So that's very interesting as well. Revenues doubled, but profit has trebled. So they're managing, because of services, like I said, AWS, the profit is increasing massively. Are Amazon buying back their shares? I am going to say no, and I was correct. Also because I looked at the video ahead of time. But anyway, 480,000, 48 million to 50. Sorry, that is 4.8 million to 5 million shares. The reason why they probably issued more shares is because they think that Amazon may be even a touch overvalued. I don't know exactly when they've issued those shares, but they haven't issued masses compared to other tech companies. Sometimes they issue millions of shares, but Amazon has increased a little bit. Now we want to look at the free cash flow, and is the free cash flow increasing? Surprisingly, no, 17 billion to only 7. So I want to look at the total passes here quickly. You can see only 2 out of the 5 steps, and has a free cash flow ratio of around about 240. 1.6 trillion to 7 billion. So why is it 7 billion? That is very low for Amazon, considering it was 17 billion 5 years ago. Well, first I want to go about what is capital expenditure. It's funds used by the company to acquire, upgrade, and maintain physical assets such as property, plants, buildings, technology, or equipment. So why am I telling you about that? Well, let's quickly go to Amazon's, we look at Yahoo Finance, and you can see the free cash flow here is 7 billion this year, 25 billion, 21, 17, and 6. So you can see it has been increasing up until the current year, and I want you to draw attention to some things that have changed massively. You can see that the capital expenditure has gone up by around 12 billion, which would put this at around 19 billion if it wasn't for that. And you can see that that's the only real thing that's changed. Capital expenditure has been massive. Operating cash flow down a little bit from 2020. Up massively from 2019, but you can see the end cash position about what it was before, 3 billion lower, higher than 2019. But the main thing is this capital expenditure. So what are they doing in terms of capital expenditure? Well, you can see that there is things. Amazon spends $120 billion on third-party supplies and services in 2021. So they're increasing their capital expenditure to basically facilitate future growth. This is a cost now that is a negative, but in the future they can say this is a massive increase. So let's have a look back at the steps. 2 out of 5. So can we get a couple of likes in this video for 2 out of 5? I think this is still interesting. This free cash flow ratio is not 230 because we'll look at their averages, but even if it's 20, it's still going to be very, very high, over 60, 80. Next thing you want to do, 90 as you can see here. So let's have a look at the discounted free cash flow. I've estimated the future free cash flows. Even with 2021, with being 7 billion, I've kind of forwarded out to what I would expect they would be, even with the money invested, because they are spending a little bit of money now, but the valuation, the free cash flow probably will be going in this way in the future. So with these future free cash flows, you can see the future free cash flows is just shy of 2 trillion, and with Amazon's market cap of 1.6, no surprises here. But discounted free cash flow says it's a little bit overvalued, or a lot of bit overvalued, around about 33%. They would say $2,200 a share, but one of the more interesting things here is the Buffett Graham intrinsic value, massive earnings per share, massive growth rate, 37% on a company this size is unheard of. But let's have a look. a fair value of $5,500 a share, 65% discount, and a Graham price, which is the price you want to buy at. If you ever see Amazon at that price, you buy and hold. You hold it for 20 years and you make money according to Graham's valuations. $4,125 a share, which is still a 23% discount. So this discount-free cash flow says it's not a buy, but the Buffett Graham intrinsic value based on earnings per share and growth, they love this stock. And if we just interestingly look at the tip ranks as well, $4,200 a share, which is in about where the Graham price is. So analysts on the high side have it about 5,000, lower side still undervalued, average 4,200. So analysts, Buffett Graham, and all seem to agree on this, whereas the discount-free cash flow says it's a little bit high. Finally, just want to have a quick look at some technical analysis and just see where the stock is. So we look at the year chart. One thing I like to do is look at the moving averages. So let's just get those on quickly. I like to look at a varied moving averages, a bit longer on the time frame, but still relatively short. So I like the 50-day, and I usually put this in green. Let me just put that in green now. And then we'll duplicate this and get the 100-day, a slightly longer moving average. And then finally, what we want to do is add in the 200-day. And this gives us a pretty good spread on the moving averages to see where there's been positive moves, negative moves, is there resistance or support. And then let's just quickly add the 200-day. Look at that increase on the 200-day. So what are things that I'm looking at right now? Well, you can see the 200-day has acted as not necessarily some support, but it has broke above the 200-day each time it's dropped below it. And currently it is trading about that 200-day moving average part. So that would probably be a buy signal because this has acted as resistance basically all this year. And it hasn't dropped below the 200-day consistently in a very, very, very long time. So that is a bullish stock. 200s act as resistance for a long time. Yes, it drops a little bit below it, but I'd say that's a pretty good thing. And you can see here, a bit of a negative price movement. The quicker moving averages has moved into the longer ones, and the price has dropped as well. But this 200-day has held for a very, very long time. Next thing I like to look at is the MACD, and this is moving average. And what we want to do is see when the signal lines cross. So when you can see here, the signal line is actually on negative price movement, so it probably will drop below the MACD. If you were to use this, I would say not buy right now because you'd want it to go under and you'd buy again. So if we just pick some examples, MACD crossed here, raised here, you would have not made money. You also would have not made money here as well. So usually the stocks I'm seeing, even that one, you wouldn't have made money. So MACD does not look to be too good with Amazon in terms of when to sell. If you look at the positives though, when it crosses, buy there, sell there, buy there, sell there, buy there, sell there, and finally buy here, and you would have sold. You wouldn't make money then. But it looks on the positive MACD when the signal line crosses, massive buy signal. If you're timing the sells, it looks like it's not really too good, but definitely on the buy side, it looks very promising. And finally, I like to look at the RSI, Relative Strength Index. So let's just click on that and close down here. So is the stock in an overbought or oversold region? Currently, it is pretty much exactly where it should be. And if we look at the negatives, yeah, underbought, shoots up, underbought, shoots up, oversold, drops down, overbought, slows down. So this is looking pretty good, but I would say the MACD is probably the best in terms of when the positive momentum is, and obviously that 200-day moving average is held for as long as I scrolled out on that chart. Right guys, thank you very much for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.